Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin. Busy day. Several companies must have gotten the same memo that today or yesterday are the days to announce some CEO shakeups. We have shakeups at Disney, shakeups at Salesforce and Mastercard. So we'll talk about all those shakeups and what that means going forward. Earnings, a lot of earnings. TJX just out seconds ago. We'll also talk about Toll Brothers and Lowe's and Papa John's and Salesforce and Space, of course, Virgin Galactic, Smile Direct Club. So a lot of earnings to get you today. Plus major volatility overnight in the S&Ps. We'll talk through that. Our guest today at 8:35 will be joined by Kevin Davey from KJ Trading Systems, and he'll tell us how his algos are working in this market. Joel, tell us what happened here. It was a wild overnight session there.
Yeah, what you see is not necessarily what you get. Big all range overnight. We floated up and made a high of 31.5850. That's only 20 handles from where we're trading. And then at 3 o'clock, 3:15, not seeing any news. They pulled the rug out from this market, and we went all the way down to 30.91. Yes, folks, we did pierce 3,100, went to 30.91. That takes us back to some levels that we saw in early December. And then those buy the dippers just got up and started buying. And now we are green on the session by 6.5 handles. The close from yesterday, I wish I could tell you that was a good number, but we've traded through it so many times. That's 31.3250. We'll keep an eye on that. Take out that pre-market high of 31.5850, folks. If you found support there yesterday, above that level yesterday, then it will act as resistance, but we cut through that like a silly putty. So we'll see what happens. But right now, well off the lows in the morning, and just, going back into recent memory, a lot of times, the high of the moves or the low of a recent move is made during that pre-market or after hours trading, so you never get a look at it. But here we are. I guess the best number I could give you for the day is along with the close is mid-range at 31.25.
So we haven't had an overnight quite like that in a while. Is that just follow through from yesterday and the day before?
Man, I guess so. I don't know. I mean, it also coincided with the closing of the European markets, and they were probably weak. But man, if you have some size out there and you're trading and you want to move the markets, I mean, there is good liquidity out there. But if you're a big bad, trader, both directions, you can move the market, and that's exactly what happens. So, like I said, a lot of times the high and lows and moves are made at in those overnight sessions. But I always keep track of quarterly numbers. Don't usually get to see them very often. A quarterly high, well, obviously we took that out by quite a bit. Our quarterly low, we're ways from that, but we did, or the quarterly close, we're well below that. But I did have a quarterly number at 31.12. We did take that overnight. We didn't get a shot at yesterday. So if I do see that, I think that would be something that I'd be willing to, take a longer term position on the long side and try and hold it with a little bit more generous of a stop. But I don't know, unless you were up last night, you didn't get an opportunity at that 31.12. And if you did, you probably weren't feeling too good when it went to 30.91. But anyways, we've got other news to cover.
Oh, well, yeah, I just have one more question. The fact that we're significantly off those lows, what does that do for your mindset right now? Or
what does it do for my mindset?
Or what does that tell you?
It tells me that I'm glad I didn't load up short, yesterday because, I covered some stuff near the close. So I'm glad because, I'd be like, oh, it would have been the opportunity to cover at 30.91. So just from a trade perspective, it's positive. I want positivity. I know I've been a bear, been a bull, been a bear, being a bull, but this is a kind of situation where it's more than that. It's about a potentially bad international situation, and holy mackerel, the CDC didn't help things yesterday.
Well, yeah, I wanted to address that a little bit here. So obviously, CDC press conference was the major catalyst yesterday for the weakness in the markets. They had a press conference in the afternoon, and they were pretty alarming in their word choice. They said that we need to straight up prepare for a pandemic. This is Dr. Nancy Messonnier. She was the woman speaking. We need to prepare for it to hit America. It's not if, it's when, it's how. And I saw a lot of people on Twitter, or a number of people on Twitter, saying that this is alarmist rhetoric. This is irresponsible of the CDC to say these things when the vast majority of cases are still in mainland China. It's affecting a minute fraction of the global population. And I saw that, and I couldn't help but think, well, what's the alternative to them saying, for the CDC being as alarmist as they were, right? They either come in and they are overcautious and it's not as bad as they said it might be, and it turns out in hindsight that they were too cautious, or they are not cautious enough and it's worse than they indicated and were caught unprepared and flat-footed. I would prefer that it was the former. I'd rather the authorities be more cautious and be a little bit more alarming, if that's what it takes, then if they undersold the severity of this thing. And just to follow through point that Brent is slacking me right now, but he had a great point. Overnight, we had that headline out of San Francisco that San Francisco declared a local state of emergency, even though there is no confirmed cases yet. There are a number of people who they think could have it. So I'm not upset or anything by what the CDC said. Everyone's saying that they were fear mongering. Consider the alternative, which is worse, is that they undersell it, and turns out it's way worse than anyone could have predicted. And I'd rather that not be the case. So that's where I stand on this.
I guess the one thing to me, I mean, what about their comments is, their comments are their comments, and there's nothing you can do about it. But their comments a week or so ago, where China's doing a great job containing it. So,
that's not the case. Turns out
that's not the case, and a lot of different factors here. We just gotta start testing, here in the United States, get, verifiable tests, check what the cases are, and then, move on from there. If not, it's all, speculation, and you just have to take the situation day by day. And that's what we're, trying to do here.
Right. And something else I want to bring up. I saw this from Tracy Alloway at Bloomberg.
Sure.
She brought up an interesting point. So if we do go into like market correction territory because of coronavirus, is this a confirmation of the inverted yield curve signal we got last year? Right.
You gotta be.
I mean,
kidding.
see, like it's this is the point, right? There are all these warning signs that there could be, and every warning sign under the sun, but we will never see it coming. We'll never see the reason for the crash coming. Not saying there will be a crash, but like if there is, it would be caused by a virus. Who could have seen that coming last year, right?
Oh man, I mean, and I think we've discussed this before. I think maybe as early as Friday when we had Ben Lichtenstein on, we taped that interview. You had the internet bubble, right? And that caused a correction. And then you had the financial crisis, and that caused a correction. So, if you were looking for, what's the catalyst, a lot of times I said, you don't know what the catalyst is.
Exactly.
Right? And here you have the catalyst.
Right.
It's a little different kind of catalyst, than a financial
Sure.
crisis
Sure.
or an internet bubble. It's an unknown catalyst, and that's the thing that makes makes it a little bit scarier. Also, the way the market reacted immediately, I think really put some people through the ringer because it basically in the early part of January just went straight up. So anybody, with, short positions, initially, like myself, and I know Dennis had some that were more shorter term,
You were early.
they were early. They were no good. Luckily had a few later date ones on, but the timing is everything in the market. And I think the market's initial reaction to rally, like it did in February, I think really, if you look at it from where we were at in February, or late January when this took place, we are below that level. But the thing that seems like we're so much much down further is that we had this unbelievable rally afterwards. So when you put things in comparison where we were when it initially happened to now, yeah, we're down. But if you look where we're down after that, just absolutely baffling rally, yeah, then we're down quite a bit more. So lot of different factors add. And when I was on the Correlate economic report yesterday, I say the same thing. Where are you at in your investing, horizon? If
Right.
you're older, if you're 80 or you're getting ready to retire, you have a kid going to college, or you want to buy a house or a car or something, you have to look at it differently. A young buck like you, buy the dip.
Right. Exactly.
So there's a lot of, it's hard to say, oh, should I buy this dip? Well, where you at? If you're 69, you're getting ready to retire,
Yeah.
it's a different, there's different investment vehicles out there, and everyone has to do it to fit their own time horizon and their own tolerance for pain.
Right, and trading different than investing. Obviously, Michael Batnick had a great point yesterday. As an investor, if you're really freaked out right now, then you probably have too much risk. And if you're not freaked out, then you can take some more risk. So, something to keep in mind as an investor. Trading is obviously a whole different beast. Let's get to some of the individual moves here, Joel. A lot of them.
One question I would just want to from the chat: thoughts on margin calls? Yeah, I think you probably already had quite a few here already. So there is that, that impact, on the open. But like a lot of times, that stuff they blow people out in a day. So not as much of a margin. I just looked here. What happened is there news out on Smile Direct Club?
Yeah, earnings.
Holy Toledo.
Yeah,
Wow.
you want to go there? We can go there.
Yeah. I mean,
Let's go there right now.
I'm making you smile.
No, not this morning. Losses were a lot wider than expected. They lost 25 cents per share last quarter. They were supposed to only lose 9 cents per share. At least that was the estimate. Sales light, 197 versus 199 million dollars. So a slight miss on the sales, a big miss on the earnings. They guided that their sales for the year would be slightly above $1 billion, which was also a little bit light compared to the estimate there. So we're seeing this now with a lot of the IPOs from last year. We're focusing on profitability. How can we make money eventually? Uber said so in their report. They'll be profitable sooner rather than later. That set the tone. Lyft didn't say anything about that. Smile Direct Club, losses widening, going in the wrong direction.
Yeah, so where are we at here? We're in the vicinity of all time. Nope, not yet. I'll give you a number, 759. That's the all-time low. That was a monthly low in December. That was backed up by a monthly low in November. It's 770. And where do we get to? Pre-market low comes in at 818. So it's pretty close to that area. You've bounced a little bit, but there's your major support. Since making that low, it's had a trouble getting over $8. So maybe 7 to 8, or 770 to, I don't know where it could go on a rally here. But definitely pre-market low is above the all-time low. So that's good news for Smile the Direct Club shareholders. If you can say that's good news.
Analysts totally out to lunch on this one. Of the whatever dozen ratings, they're pretty much all buy, outperform, overweight, with the exception of one or two. So
Aren't those guys' hands kind of tied though with the if you're doing the the IPO, you know what I mean? Are you going to come out and do an IPO on something and say something bad about it? I don't know.
sure, the underwriters, sure, but I
Yeah,
mean, the IPO
Heather Alice.
was how many months ago now? I mean, I think it's time to move on from that as a reason for your rating. IPO was in September. Okay, it wasn't that long ago, but
You know what you could say on this one? I mean, from the IPO, this thing kind of said like, stay away, right? From like almost from the first day of trading. So, there's a pattern before going into this, and then you had that crazy rally, doubled in 2020, and then I don't know where was that on the retracement, but if you want to, if you've been waiting to get into this thing, you might get an opportunity here near the all-time low.
well, that's for sure. All right, let's go on to move on to just away from the earnings for a second. Let's just talk a few of these changes at the top of companies, starting with Disney. Obviously, that's the big news of the day here on Wall Street. Bob Iger out. Surprisingly, I guess the timing was surprising, and the fact that it's effective immediately was also surprising. So Bob Iger has stepped down finally as the CEO of Disney. He had pushed back his retirement a number of times. He is now moving to the executive chairman role, and Bob Chapek, who was the head of their parks, is now the new CEO of Disney.
We've talked about this one before, and boy, oh boy, when was this announced, Spencer? Was this announced after the close?
It was, yes.
Wow, because I mean, this thing I know the market. I'm trying to think of what the market did yesterday as far as gapping up or gapping down. But boy, it gapped down yesterday and kept on going lower. Continuing here in the pre-market, Disney, where'd we get to? We got to 121.01. That's your pre-market low. We're off that area. Use that as a potential area of support. Yeah. Also, you got that big old gap to fill in this one from the original announcement. Oh, that's getting eerily close. 117.86, folks. That will fill the gap. April 11th. I know that was a long time ago. I was waiting for it to fill that gap. May finally get the opportunity there. So if you've been waiting for that, for the stock to come in from that area, 117.86 to 126.36. If that's your objective on that, a gap fill.
That was the Disney Plus gap.
Yes.
Was the announced Disney Plus.
Yes. Yep.
Interesting.
Yep. So there you go. If you're looking for a reset of that, I mean, the other thing too, I mean, just the timing of of this announcement, and Disney's definitely in the crossfires here with amusements parks all over the place.
Mm-hmm.
That's going to be, they're impacted by that as well.
Yeah, I mean, I'm not one to subscribe to any particular conspiracy theory that he's doing this because of any current events. It makes sense. The explanation makes sense that Disney Plus is out now. They've completed the acquisition of Fox. Those are the two major shakeups that are two major things that have happened to the company in recent years. So it's as good a time as any, perhaps. And I mentioned he has pushed.
How old is he?
Gosh, if I had to guess, I would say he's 67. I'm gonna Google it right now. Let's find it.
Okay, and he's been there for how long? I mean,
he's 69 years old. So yeah, pushed back his retirement at least 3 or 4 times. So that's why I said about time. He has indicated this desire for a while. And I guess it was a bit of a shock that it happened, in one day like that. But that's the way it goes sometimes. I do want to also get to Salesforce, CRM. They reported earnings after the close. So I guess I'll give you those numbers and also tell you what happened at the top of their C-suite. Salesforce reported Q4 adjusted EPS of 66 cents versus a 55-cent estimate. Sales $4.85 versus $4.75 billion. They are raising their sales guidance for the fiscal year 2021. We haven't seen a guidance raise, I feel like, for a hot second, especially in this market. But they're raising their sales guidance for the year. Their EPS guidance for the year came in above estimates. And the other news is that the co-CEO, Keith Block, has stepped down, leaving Mark Benioff in charge of the company.
Ooh, so the old double C-suite exit, huh? That's interesting. Boom. That was in Disney that I saw that. I mixed things up. Well, your initial spike low in CRM came in at 171.50, and they've got a nice bounce on it. I think at this point, it's 171.50. Don't know if we're going to get back down that low. You did get a pop up to 180. This is called that 180 minor resistance. If the thing starts to go into motion, not bad numbers. We're trading below the 2-day low, 178.79. With this one, man, it's had such a major rally here. This 177.30 is where everything really kind of emanated from on that one run up to 195. So I'd say on this one, I just don't that this area, the way it went through 165 to 175 in 1, 2, 3, 4 days. I don't know. Hard to find a spot in there if you're a little bit more patient over the next week, 10 days. 164.45 was your January 8th low, and your low for the year was 163.58.
And then last one is Mastercard. They announced late yesterday that their president and CEO, Ajay Banga, he is taking the role as chairman, and their chief product officer, Michael, Maybach, is now the new CEO of Mastercard.
All right, I just want to say we got a nice little rally going up here, up 10 handles at 31.42 and a quarter. So, market seems to be breathing a sigh of relief, much closer to the high of the pre-market session, 31.58.50, than we are of that low of 30.91. Mastercard, real bad 2 days. 4 days ago, the stock was at an all-time high. Now it's in retreat. This one, not too much off the pre-market low. Pre-market low is, let me see, what is that? So much red on here. I see 294.05. Is that it? And so that was the low. Yeah, right on the initial news. That went down to 294.05, and then you popped up a little bit here. So a little bit of a rally, minor resistance at 301.50. Series of lows. I mean, you've come this close to 300. You have a bunch of lows at 300.51. Not a bunch, but 300. We're already below that, aren't we? Man, these things. Yeah, we are below 300. So 300 will be a psychological resistance level, and use the pre-market low as support. Below that, looks like 290 would be an area of support. And this, like for these kind of days too, and this I was noticed this yesterday in the e-minis and stuff. If you put stuff out there, good or bad, you're going to get lifted or you're going to get hit. The market's looking for liquidity. So a lot of times these kind of situations, if you're trading something that don't have necessarily a level in mind, throw it out at the half and whole numbers, and you're going to get done. There's a lot of volume trading there. So if you're stuck on something or you want to get in something, put your order out there. You're going to get hit on it. There's a lot of liquidity.
All right, let's get to this TJX report, because don't look now, but they're making back almost all their losses for the past couple days in the pre-market session here, and it was a good report for TJX as I pull the chart up on the screen here. Q4 EPS 81 cents versus 77-cent estimate. Sales of 12.2 versus 11.83 billion dollars. Comps up 6% year over year. Their guidance was good for the quarter and for the fiscal year. They're also raising their quarterly dividend by 13%. Announced a 1.75 to $2.25 billion buyback. So earnings beat, sales beat, div raise, buyback, guidance good, all good.
Well, this of all the charts that we've looked at and all the issues we've discussed, This is probably the easiest one to analyze from a technical formation. People took the beats in it yesterday, right? And here you are getting right back up at that area. So right near the all-time high. Your 2-day high, 63.92. Just 64. I mean, look at all these daily high, folks. 389, 388, 392. Then the all-time high at 64.30, and then 63.92. You dipped to 59.62 yesterday. You're already through the 50% retracement. If you're worried about this one, I mean, let's see what happens. If it breaks out over 64 and just keeps on going, great for those shareholders. But man, overhead supply perhaps coming into this one. Good report. You just want to see it open up, clear 64, 64 and a half, 65. But boy, oh boy, that, like I said, this one, nice setup here, strong stock. People getting a lot of losses back from yesterday. Anybody that was buying to the dip into the report right now, the pre-market high is 63.57. And the other reason, when you see those kind of highs like in the same area 4, 5, 6 days in a row, that doesn't tell you that mom and pa's are getting out of this thing. That's telling you that large shareholders are getting out of the stock. That there's, they're just saying, I want out around 64. But if I put, it's a kind of a thinner stock. So if I put out, let's see, how many shares does this thing trade? It trades 5, 6 million, traded 8 million yesterday. So, if you want to work yourself out of a 500,000, 1,000,000 shares, you got to be pretty coy about it. So let's see if you can mop up that 64 seller and keep on going. That was an easy one, Spencer. Give me more charts like that.
I can't control the charts, Joel. Sorry.
Oh, you control everything else at that office.
Okay. Let's go to Virgin Galactic here. SPC. I should rephrase. I can control the charts I show. I can't control what those charts say.
Okay.
Virgin Galactic here. First quarter as a public company. Earnings per share, they lost 37 cents last quarter versus a 19-cent loss estimate. Revenue came in at around a $530,000 versus $1.78 million. So these are really small numbers here. For what is a pretty new company, they also announced that they're going to resume space tourism or selling to the public, which they've halted, I think, for the last 5 or 6 years now. And this one's a high flyer. It's coming back down to earth here a little bit.
I don't know. I mean, they made what, 600K last quarter?
Yeah, I know. It almost seems silly to talk about it, but the stock just hasn't stopped.
I'm gonna stick with my earlier thesis. Not that I'm out there buying it at 29.30, but 2-day low, 29.10. So that area has still been at, the other low comes in at 28.71. You talk about the stock, holding up on a relative basis. Yesterday's low, $4 above the previous day's low, and just a carnage market. I mean, it's holding up. That's all I can say. And we're kind of interesting here. Someone has an opinion here at 31.50. So they've been supporting this stock in the pre-market ever since 7:15, 31.50. If not, keep an eye on that. If not, look for that $29 area.
That daily chart is something else, huh? All right. Toll Brothers, moving on to a less extreme, less volatile stock here this morning. Although it is pretty volatile here in the pre-market. They report earnings after the close yesterday. Q1 EPS 41 cents versus a 46-cent estimate. Sales of 1.33 versus 1.45 billion dollars. So a miss and a miss for Toll Brothers.
Tough environment, and I think someone did a blanket downgrades, right, on this thing, right? And on the housing sector. Bad day yesterday, follow through here this morning, trading at the lows of the pre-market session. I would have told you 40 was the area of support, but we are trading below 40. Someone wants out, and they're really putting a lot of pressure on this thing. But boom, let me see if I can find a daily low for you. All right, couple lows at 39, Actually, 3-4 lows at 39 and 38, but pretty big decline here. This one you want to mark to see where the pre-market low is. Big move for Toll Brothers after a big move yesterday. I'll tell you, if I was short, I would try and find some levels to cover. I am not. If I was long, I don't know. That'd be a tough situation. But chewing through a lot of support here. Check that pre-market low.
It was SunTrust who had several home builder downgrades.
Yes.
Just
yeah.
FYI.
And we're getting a lot of questions here about Dennis. Dennis is fine. Okay.
Yeah, oh,
He will be back on Monday. He had some time off and he took it. Everything's fine. I've been talking to him and texting to him every day. He misses you guys immensely. But he's in a great mood. He's doing fine. Not happy about the markets and stuff. But he will be back on Monday. We're getting a lot of questions.
yeah, I think we underestimated the level of concern.
Yeah. You guys make fun of him so much all the time.
We did not anticipate that, so we're sorry. We're sorry.
We thought you guys would be happy that he was gone, but no, he's fine.
Sorry for any
doing good.
undue stress that was caused. That was unintentional on our part.
Yeah, he did not get arrested at a dollar store for arguing with the guy. And he's not on a cruise. He's in a great mood, and I will tell him that send the love from the pre-market. So now you guys better be nice to him when he gets back and quit. No, he's not.
No, we're not going to tell him that. No, nobody missed him when he gets.
He's not stuck in a lazy boy chair. And it's funny because you get everyone complains about his rants and everything, and this is a pretty unusual week. But just put it to Triple D has his priorities.
He's all good.
In the right place.
Yep, he's all good. He'll be back on Monday. Let's do a couple more before we go to our guest here. Let's do Lowe's, LOW. Out this morning. Earnings per share 94 cents versus 91 cents. Sales 16.03 versus $16.17 billion. So a slight EPS beat, slight sales miss for Lowe's. They gave some EPS guidance for the year that is in line. Actually, that was a little bit lighter than the estimate there, but a more or less in line report for LOW.
Okay. Well, this is what Dennis would say. If you're hitting this stock in the pre-market down at 110, then you haven't been listening to the pre-market prep show. This has been a strong stock, a great performer, and you just, read the reports, whatever the tape is. I mean, just be careful here. So you hit 110 and now you're at 120. So buy the dippers. Out in force on this one. What's the range from yesterday? We're above yesterday's low, so I'd use we closed on the low here. So I maybe get a reset at 118.52. I don't know about that. And then I'm not even going to count that low from yesterday or that pre-market low as a legitimate low. But I would say if you're a little concerned about this stock, you made your all-time high. Let's call it 127. Let's call it a 8-point move. Half of that for this 122.5, 123 area is halfway back. So if you get a look at that today, potential resistance in that one. But and Home Depot, that had to give it back yesterday, right? That was not a good day to report great earnings. That stock ended up in the red. Open 46.10, hit 46.97, sold off. So that's rebounding back today, up $1.12.
That should give you some clues for what maybe a stock like TJX could do today, right? It's not necessarily what the report says; it's the day that matters. And HD yesterday kind of showed that. Let's go to our guest now. Bring him on, Kevin Davey from KJ Trading Systems. Kevin, good morning here.
Hey guys.
It's been a volatile week, Kevin. How have you been approaching things?
Go trader. So I trade all kinds of futures just with algos that I've created. So for me, it's been pretty much business as usual. Not always good, obviously, especially with like the ES has been kind of crazy, but what I found with all these kind of events is once you create some strategies and you test them, you just follow them. And, sometimes it works out, sometimes it doesn't. So this week it's actually been working out pretty good. So I've been pretty happy.
Well, first of all, you guys know I'm going to like this guy because he went to Michigan, right? Number
Yep.
one. And, when you make the joke, like, I'm not a rocket scientist. Well, Kevin, you are a rocket scientist, right?
Yeah.
Tell us about your background.
Well, so I went to University of Michigan, got my bachelor's in aerospace engineering. So that was a lot of rocket science. And I actually interned at NASA one summer and then moved out to California. And I was doing a lot of work there for, all kinds of defense, high-tech fighters. I actually did a lot of space-related stuff. They have like antennas, inflatable antennas that go in outer space. And so I was working on that kind of thing. So
how the hell did you transition into the market?
That's a great question. Well, it was always kind of a hobby for me at first. I remember getting something in the mail that said, "Hey, you can make a ton of money trading futures." So that kind of intrigued me. I was like, "Ooh, what's that?" And started investigating, and it fit really well. Just examining the markets, writing strategies, testing stuff. With a kind of engineering, kind of math background, people like me who are into that kind of stuff just eat up market type things. And, it's pretty cool to put rules together and put money on the line. And, if things go right, you actually make money. It's
actually follow the rules. Maybe
Yeah.
You're going to be working with me, I have a feeling. Before we go in, I know you got some charts, some stuff to share with us. I got to ask you, about Virgin Galactic. I know you don't do a lot of stocks, but just can you give us your overview on this one since you have experience in the markets and also in the field?
Well, I'll admit you caught me off guard with
Okay.
this one. So
okay. Do you know the stock though, right? SPCE?
Yeah, barely. I mean, I don't
That's fair.
I don't do a whole lot of stock stuff.
Okay. All right. So let's get to it. You design systems, right? You different time frames and stuff, and you put together some slides for us. Spencer, can you give him control?
Yep. Kevin can just take control. Actually, you can just grab the screen here in the middle.
Okay. So I'll let you take it away and throw in. I may interrupt you with a few questions.
Okay. Let's see.
Right, that middle button, that share button, and you can
Yep.
grab it and show us what
Hopefully
you got.
that, and then I just want to move. Hopefully you guys can see it.
There
My
we
screens
go.
right now.
I see it.
Okay. And Joel and Spencer, I do a lot of algo building, and so this is just an example of. I have a whole bunch of systems for the mini S&P, and those kind of aggregate on the left, and then I also just have the euro currency on the right. And what I do is I just kind of put all the algos together, and they just give me an overall trend. So a lot of the strategies I'll trade individually, but it's always nice to see like how they're all adding up. So for example, the chart on the left just shows the mini S&P, and towards the end of last week, or mid last week probably, they all went from bullish, saying, hey, the market's going to go up, to all of a sudden warning about a bearish thing. And as it turned out, with this all the coronavirus stuff, the market actually kind of fell Monday and Tuesday. But I wasn't really expecting that with the algos. The algos just kind of suggest, hey, we got might have rough times ahead, beware. And it kind of turned out to work that way. And then with the euro, it's just been in a downtrend forever. So this is a pretty boring chart. But so I do this kind of thing with some of the major markets just to get a good overview. And then I have other things, like, for example, this is kind of what I do all day. I develop systems. And so here's just an example one. This is crude oil.
Okay.
And there's nothing real special about this algo. This one's actually in development right now. But, I test it and do some optimization and do what's called walk forward testing. So you do a bunch of different things to try to bear out, hey, did this strategy work historically? And then if it does, then you might want to put it, forward and say, oh, okay, hey, this is going to work live. Maybe I'll try trading it. So this is just a good example. I'll show you another one, which is actually Coco.
Just let me hop in here for a second.
Sure.
So how many systems will you run on the E-mini? How many different systems?
I have run up to about 10 or 12 at a time. And I scaled back a little bit from that. And the reason is a couple of years ago, I was running, I think it was in early 2018, I was running a whole bunch of them. And wouldn't you know, they all decided to go long right towards the end of January in 2018, right before the market kind of crashed. And so then I kind of went back and said, ooh, maybe I'm just a little too correlated sometimes with all these systems. So now I'm down to probably like 3 or 4 at any one time because I'm really
time frames. What's your time frame?
I do daily bars, 60-minute bars, 240-minute bars. I actually have some. Here's an example one of for the mini S&P that's down to 5 minutes. So it actually works off 5-minute bars, and it usually gets out the end of the day. Sometimes it holds overnight.
I don't know if you want to give away any of the secret sauce here, but we're getting a question. What variables you favor for your algos?
I look at anything. So for example, this particular strategy, which I actually just give away if people are interested, it uses opening range, and it's just a simple pattern based on opening range.
What opening range? Are you more focused on the 6 p.m. opening range, and or do you incorporate the data from the overnight sessions?
This particular system does not. So this one, you can kind of see up in the upper corner, it says es.d. This is TradeStation.
Yep.
It's a daily bar. So it only works on the stock market day session. So 9:30 a.m. to 4:15. So this particular system just looks at the first couple bars of a new stock market session, just the traditional session. I do have other systems that will look at overnight, some that almost always just trade overnight. It's kind of a mix. And if you're algo trading, that's one of the things you're looking for. You're trying to get systems that do different things and react differently. You don't want all trend following mini S&P systems, because then you get into trouble where, hey, they all go long, and then you're like, oh man, I got too much risk on. So I try to mix it up and get uncorrelated systems. That's the real key, I think, with trying to do like this algo trading. And you can do it because you automate them, and then you don't have to be watching all these different charts all the time. So that's the nice part.
That's the nice thing about it. How's the slippage been over the last few days?
I don't trade like every single day with every single system, so I haven't really noticed
I agree
too much. I was running actually a test system on the micro mini S&P yesterday, and I was expecting just what you said, a lot of slippage. I was just entering with market orders. I was running a test strategy, and believe it or not, I was actually getting positive slippage over like 4 or 5 trades. You add them all up. Sometimes, the slippage was hurting, but a couple of times I was getting like 0.5 point better fills than what I thought I should be getting. So that was pretty neat. That doesn't happen every day.
No, yeah, I've noticed that too. I mean, obviously with limit, or getting some positive price improvement on limit orders, you kind of surprised when you get that. But if you put in markable limit orders, so is this Rob Hood's asking here? Does this system work with? If someone has a different trading platform, or is this specific to TradeStation?
This one, and the one I give away is actually. I give you TradeStation code or everything, but I also explain the rules in plain English. So, people would just have to convert it. And I do a lot of that myself. So I'll find something in another somebody wrote in another language. As long as I can get it in plain English, I can convert it. So, that unfortunately is what you have to do if you're not using TradeStation.
And your site here, I think I had it up here on the dock. I took it off, guys. So people are asking what your site is so they can take a look at some of your work.
Okay. It's kjtradingsystems.com. And you can always Google my name, Kevin Davey. I think I'm the most popular Kevin Davey in the world. So not that there's not that many of us, but and you can also, if you do that on YouTube, I have tons of videos on my YouTube channel, so people can look there too.
Do you ever override your systems?
I try not to, and it usually bites me. So I'll give you a couple examples.
Sure.
Big events, the Brexit vote, I stayed in my systems and got hammered. But then by the end of that week, I'd gotten everything back and more. So it paid to stay in it. And then the Trump election, just that overnight, I was way down. But by the morning, I left all the systems running. It was back to normal, and everything, all those losses had kind of evened out. So I like to just follow the systems. Now, a lot of people can't do that because they start to get nervous. So like now would be a great nervous time for people. Oh, I'm going to turn off my ES systems and I'm going to double my gold systems, because gold is going crazy. Well, the problem is with a lot of these algos, you don't really know what they're going to do, how they're going to react. Some you do, but a lot you don't. So it's usually better just to stick with it. The only time I'll turn systems off is if I test them that way in the first place. So let's say I created a mini S&P algo that never traded Fed announcements, that, cut out beforehand. The way I would test it is go back, find all the Fed announcements and make sure I went flat, 15 minutes before and stayed out until maybe the next day. That's the only time I would try to work news into it, because otherwise it gets really hard to try to avoid news.
All right, Kevin Davey, his site is KJ Trading Systems. Kevin, thank you so much for joining us today.
Hey, thanks, guys. I loved being here.
All
All
right.
right, we'll get you back again soon.
All right.
Thanks,
See you
Kevin.
guys.
Have a good one. All right. I do want to talk about Beyond Meat here.
I just missed that question. Is Kevin, are you already gone?
Yeah, no, you got, yeah.
Oh, man, because I wanted to ask him about Bitcoin, and RCL XOR was
sorry.
asking about that too.
We'll
get it back again.
Yep, we'll get him back and we'll get his thoughts on Bitcoin. Beyond Meat here. This was a match made in hipster heaven. Starbucks has announced they're adding Beyond Meat products to all of their Canadian stores. It'll be a Beyond Meat sandwich, I guess. So starting March 3rd, Beyond Meat available in Starbucks in Canada. I remember when McDonald's was it McDonald's? Yeah, McDonald's that had their Beyond Meat partnership, and we said we were going to go there and try them with Dennis, and then we found out that they weren't offering them near Dennis's locations. But I would like to go across the border and try these in Starbucks now.
What have we been doing here in Beyond Meat? I haven't really been keeping an eye on it too much. It looked itchy. It looked like it wanted to break out, and then it got hit with the market again. Trading up in the pre-market session here. We did sneak over 117, getting to 118.63. Pull back a little bit. I think with this one, what was your high? You got nothing there. You got nothing. 116.80. So you're opening up into yesterday's high. You have the market going with you a little bit in your favor. I think already up 6 sticks. You want to see it clear that 116.80, get above 117, and perhaps venture into the 120 area. Boom. Your 3-day close was 117.45. Going on past history, boy, oh boy, when this thing, they announced a McDonald's thing, it was a big sell. I don't know. The stock's in a lot different. I mean, it also had the overhang of a secondary at the time. But if you're a little bit more patient in this one, it's really after that move off the low, you've had a trading range in it. And that trading range seems to get a little bit tighter, like 110, 122 seems to encompass the range. Recent high of the move, I see a 5-day high at 129. Nothing really sticking out at me in this one.
Let's get to some questions from the chat for the next few minutes.
Okay.
So if you have anything, drop them in the chats, either the premarket.benzinga.com chat or the chat on YouTube. I want to get to Revolve, RV, LV. They had earnings yesterday after the close, and they gave some sales guidance that was lighter than estimates.
Trading down, getting hit pretty good, but well off the pre-market low. I can't give you much here, folks. 1470 is your pre-market low, but that's already gone. You're already a couple bucks off that. Rallying up, I would say your resistance will come in at the bottom of yesterday's range, 1824. I don't know. If you ever get back up to that 1830, 1840 area, there is a pair of lows there. Old support, new resistance. On this one, for support, you've taken out the 17. I don't know. Maybe, I guess the last thing on this one, I go 1435. Then you had a high at 21, 7-point move, 3.5, 17.5. You're below that. So I don't know. Not a good look since its IPO. Maybe be super patient and wait for the all-time low. The all-time low comes in at 1435. One monthly low, 1519. The other 1435. Tough chart on that one.
All right, here's a smaller issue that we haven't discussed on the show before. Sonova Energy, ticker is NOVA, Nova, as in Villanova. Their earnings were after the close on Monday, and their earnings per share was a little bit light. The sales was a little bit light as well. But let's just give an overall technical view of this one here.
Well, here's a stock at all-time high, right? Or no, not quite. It was over 19 bucks. Had a move off the all-time high. It hit the all-time high yesterday. 1977, you're trading at 1850. Wow, this is a wild child, huh? Let's see here. You hit I can't give you much on this one, folks. What was the close from yesterday? The close was under $18, right? I keep an eye on that close. If it goes red, I'd be less inclined to hold on to it. If it can hold above the closing price, maybe get back up to 1977. There's actually three close. The old time closing high 1931, but yesterday's close 1784. So if you're buying this thing off the hop, you don't want to see it go red on the session. S&Ps had a nice rip here. We're starting to fall back. I think this is really going to be a seesaw day here. Maybe our highs and lows is in. We hit 3149.75. Now we're back in the 3130 handle. So all over the place here. What other issues?
This one's more up your wheelhouse. Microsoft.
Mr. Softy. Boom, boom, boom. There was a point where it was still green yesterday. I think Spinner mentioned that some of the big stocks were still green. Nice rebound here. Wow. I mean, what you want this thing to do? What's the all-time high? Now, all-time high is, this is called 191, 190.70. What did you get to yesterday? 163, so 73, 83. Boy, that was a 30-point move. Get back up to 178, 180. That would take back half of that move. That would also be a gap fill. You need a gap fill to, oh, wow, we're way down here in Microsoft. I don't know. I mean, if this thing better start ripping earlier, I think you got some more downside on this one. Did show some good relative strength yesterday, so that's a good thing. Your 2-day low, what was low yesterday? 157.60, 167.65, while your previous day low was 163.23. So good relative strength. Man, just had such a monster run even in 2020. But take a look at that 2-day low. You don't want to see it breach that at 163.23. not reacting great here. So I don't know if a rebound is imminent here in Mr. Softy.
What about Ford?
Oh, what a pig, huh? This stock, man. I guess we should use the Lions indicator, right?
The what?
Lions, Detroit Lions.
I was not getting that reference.
Oh yeah. Ford making a new 10-year low, 20-year low. Well, you're at your low.
How far back do we got to go here? I'm on the monthly.
I'm going back to 09.
Oh,
Jesus, Bifey. 7-Eleven. Maybe hold out for that. Up 7 cents. That was your low in November. In November, this is one where you say, "Hey, I'm buying it for the dividend." Well, you're getting crushed on this because it's wiped out the percentages of its whatever the dividend pays. Man, that yield must be getting way up there on that.
yeah.
Need to do something.
I haven't looked at this chart for a hot second. I didn't realize it was getting this bad, but wow.
Yeah, they hit it off. It gapped, and usually it it shows a little bounce, but this gap down after earnings and just kept on going. Probably some institutional size, maybe at $7. What was the low from yesterday? Low from yesterday was 722. So there's probably size all over the place. I just need some. They just had a change in the C-suite too, right?
It was about a year ago now, I want to say.
I mean, you can batch beans. You can accumulate shares in the dividend, capture and then buy and sell. But I mean, this thing is like, what's the yield on this thing now? I mean, that strategy works until they cut the dividend, and then all the funds that are in for the dividend, end up puking it out.
Yield is 8%.
And the same thing for GM. I mean, holy moly, government motors here just sliding. This is coming back to the lower end of its trading range. Just while we were looking at that stock, we got the 3146 in December of 2018, and we're right back here right now. 3056 was your October 2018 low.
All right, let's look at a couple of energy names quickly. We were asked about Enphase and Nextera, so ENPH and NEE.
Wow, this Enphase. This is solar, right?
Yep. Well, they both are.
Okay. For this one, I mean, you had the gap and go after earnings, and now you're coming back down. 47.30 would be my pressure point here, because that would leave you down to a $6 gap. So everyone that bought it after earnings had 3 days of appreciation, rang the register yesterday. So I just don't like to see that gap area of $6, and a stock like this has had such a huge run. And then NEE, holding up. This thing has just been a absolute machine. Looking at that, it's trading down today. I see some support here at 255. Or no, that's not 255. Man, these higher price stocks makes it more difficult. I would say I would not really be too concerned about this one on the downside unless it like pierced 260, 262 on a closing basis. Then it leads to the lower 250s. But, great run. I mean, it's held up pretty well over the last week. So that's showing some pretty good relative strength.
Just looking ahead to the after hours session here on Who's Reporting. Square is the big one. Etsy also reporting. I see Sarepta on the list. A number of big names. Square is probably the headline report of today's after hours session. L Brands also due to report after the close today. A lot. Booking.com is a big one. Marriott. So a number of big names here.
I would caution, and I think we've talked about this when Triple D, was on. Airline stocks are a battleground here until this virus is, we get to the bottom of it. Your hotel stocks, your
Yep.
gaming stocks.
Travel.
That's one thing about that. The virus, as opposed to like a financial crisis, is that this cuts across so many different cross sections of the economy, restaurants, tour, anything involved in tourism, um, uh, cruise lines. I bet you those cruise lines are still under pressure. So, you just gotta be cautious on those stocks that are caught in the crosshairs of this virus.
All right, that will be it for our show. You can always catch the podcast of it on whatever podcast platform you like, or rewatch our show on YouTube. Thanks to our guest today, Kevin Davey. Thanks to all of you in our chats, everyone who participated. We like it, we love it, we appreciate it. Yeah, give us a call, 734-494-0246. Email us, premarket@benzinga.com. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your Wednesday. Hope you're not snowed in like we are in Detroit.
Yeah, I'm getting a little bit of snow here.
A little bit, yep. And we'll be back with you on Thursday.